Meantime, market records keep coming with the S&P 500 crossing the 4,500 threshold for the first time yesterday, closing at its 51st record high for the year. Joining us now, Tiffany McGee, CEO and CIO of Pivotal Advisors and CNBC contributor, and Gaurav Malik, the chief portfolio strategist at State Street Global Advisors. Great to have you both with us. Gaurav, I'm going to start off with you because a lot of people don't think anymore that the Jackson Hole meeting is going to yield us much. But what are you anticipating in terms of the Fed's action? Because I see that you don't expect the first rate hike until 2023.
Given everything that the Fed has broadcast so far, number one, we're not expecting any big surprises coming out. So I think that the pace of tapering starting some point in time around, call it December, January timeframe, and then ending somewhere between July and September. So I don't think that's changing in any significant way. So it's not a big event from that standpoint for us. No change in path expected from the Fed. So I do expect that things will be as they've already broadcast. So no big change is the way I would describe it.
Tiffany, you think even if the Fed announces some sort of timeline to their taper, that there won't be a tantrum as we've seen before? Why not? Because I feel like last week we sort of got a glimpse of what a taper tantrum would look like this time around.
Yeah, so I don't think that there's going to be a taper tantrum like we saw in 2013, right? And so when the market kind of dropped 6% at the first mention of the Fed wanting to taper. So this time around, it's a bit different. The Fed has been very transparent. They've been communicating with everyone about their targets. They've been very, very clear along the way. There's been so much conversation about it and really communication from them to us, right? And so, there's going to continue to be a communication kind of going forward, right? So whatever happens this week when the Fed talks about whether they're going to move forward or lay out their plan, there's going to be continued communication about that. So there'll be plenty of times, plenty of opportunities for investors to react. So we did see that last week. I think what we really saw was just, an immediate reaction. So not kind of like totally baked in to the market, but yes, when we get this news, investors are reacting. And so I'm looking at that as really, from a market perspective, as an opportunity to buy. So we saw last Friday, the market go down. But then we also saw this week it come right back up. And we've been seeing that all year, whether it's talks of, the Fed tapering, whether it's Delta variant, all of these things. We've had 11 days this year of 1% declines, right? So again, no correction, nothing close to a correction, but we've also had 2 instances of 4% pullbacks. And in every single instance, the market rebounds and hits new highs. And we're seeing it again today.
Right. The buy the dip mentality has been pretty firm throughout the whole year. Gaurav, I wanted to ask you about a recent portfolio change that caught my eye, and that is putting some more money allocation into Europe. And I understand that you're still overweight U.S. stocks, but what kind of value do you see there?
We're pretty excited about the next generation EU fund. I think this is the first move we've seen after many years where there's a concerted effort to move Europe on the same groundings as, I would say, China and U.S. So more investments in digitization, more investments in green ESG area. I also think that the combination of Lagarde, Van Leeuwen, Draghi in Italy, I think that combination is pretty good to make sure that we can see not only near-term positive impact coming from the GDP growth, but really structural changes that can position Europe for a multi-year upgrade cycle, which is why we have started building up our positions back in Europe after really a long time where we've been underweight the market. So pretty excited about everything that is happening and everything that we believe is going to happen specifically with the next generation EU fund and that combination. I think Lagarde is going to be very positive for Europe.
You laid out the fundamental case for Europe, Gaurav, but I'm curious in terms of on a relative basis compared to the United States, is Europe just a better value with the U.S. markets at record highs?
One is, of course, on a valuation basis, whether you look at sector adjusted, you look at Europe relative to its own history versus any other market, it is definitely cheap. It's also in the segments of the market that are likely to play into some of the themes that we're seeing. Fiscal spend. We expect that potentially China is also going to expand on the fiscal and monetary side, so more loosening occurring there. All those things do tend to benefit cyclical ends of the market, which does put Europe in a pole position to take advantage.
All right. Thanks to you both, Tiffany McGee, Gaurav Malik.
Shepard Smith here. Thanks for watching CNBC on YouTube.